The evolution of credit cards. Imagine a time when purchasing everyday items like gas or groceries meant carrying cash. No plastic, no apps, just bills and coins. For most of the 20th century, that was reality. Credit as a concept wasn't new, but how it evolved into the ubiquitous credit card we know today is a story of innovation, adoption, and transformation. The seeds of the credit card were sown in the 1920s when department stores, oil companies, and hotel chains introduced charge cards. These weren't the revolving credit cards of today. They functioned more like tabs, consolidating monthly purchases into a single bill. The goal? Convenience. Gas station cards, for example, meant drivers didn't have to worry about carrying enough cash on long trips. But there was a catch. These cards worked only within specific industries. Meanwhile, installment financing, another form of credit, was already helping consumers afford larger purchases. This financing model began in the late 19th century with items like sewing machines and furniture, later expanding to automobiles. While practical, these credit solutions were fragmented and tied to specific retailers or industries. Fast forward to 1950, when a dinner in New York City sparked a groundbreaking idea. Frank McNamara, having forgotten his wallet, envisioned a card usable across multiple businesses. Thus, the Diners Club card was born, a general-purpose charge card initially accepted at restaurants and later expanding to hotels and airlines. Unlike previous credit systems, this card introduced the concept of a third party facilitating transactions between consumers and merchants. By 1958, other players had entered the field. American Express launched its first charge card, and Bank of America rolled out the Bank AmeriCard in California. Bank AmeriCard's revolutionary model allowed cardholders to carry a balance, introducing the concept of revolving credit. It wasn't just a convenience, it was a financial lifeline. The transition from cardboard to plastic in the early 1960s symbolized a shift in how credit cards were perceived, not just as tools of convenience, but as status symbols and financial instruments. By 1970, nearly half of American families had a credit card. However, these were still predominantly store-specific cards. True multi-purpose cards, often issued by banks, were rare and primarily used by the affluent. The introduction of magnetic strips improved security and functionality, paving the way for broader adoption. Meanwhile, revolving debt, still a minor player compared to installment credit, began its steady rise. By the 1970s, networks like Visa and MasterCard had emerged, enabling national and even international credit use, uniting a fragmented banking system. By the 1980s, credit cards weren't just for convenience, they were competing for customers. The introduction of the Discover Card in 1986, with its cash-back rewards, spurred a wave of innovation. Now, cards offered perks like frequent flyer miles, sign-up bonuses, and no annual fees, creating a competitive landscape that encouraged even more adoption. By the year 2000, revolving consumer debt has skyrocketed to $626 billion. Credit cards had transcended their original purpose, becoming tools for both everyday purchases and long-term financing. As credit card use grew, so did the need for regulation. The Truth in Lending Act of 1968 required issuers to disclose terms more transparently, empowering consumers to compare costs. Later, the Equal Credit Opportunity Act of 1974 and the Card Act of 2009 added protections against discrimination, predatory practices, and excessive fees. These regulations shaped the modern credit card industry, balancing innovation with consumer protection. The rise of credit cards didn't just change spending habits, it reshaped the financial landscape. Credit reporting agencies gained prominence as issuers needed better ways to evaluate creditworthiness. Processing networks like Visa and MasterCard became integral to global commerce. As credit card use surged, so did the demand for financial education and regulatory oversight. Today, while the literal card is fading, replaced by mobile payments and digital wallets, the legacy of the credit card remains. Its story of adaptation, innovation, and how a simple idea can transform how we interact with money.